Okay, guys, accelerating inflation is coming. Just from last month, February to March, the inflation rate has spiked from 2.4% to 3.3%. That's the biggest spike we've gotten in years. And that was when the oil price just started spiking over here. Now, the expectations for next month is a 3.7% inflation. You can see here, that's the most likely outcome. So if inflation continues at this trend, even in the next 6 months, we can get above 5% inflation easily because companies are sitting on oil reserves. So the price increase won't be that much initially. But as their oil reserves run out and they have to buy oil at this inflated price, then you're really going to start seeing the price increases. Now combine that with slowing growth and increasing unemployment, you have a really bad situation. And yes, in 2021, you had double-digit inflation growth, but the difference is that in 2021, you also had real growth, double-digit growth to back that. That's why the stock market was still able to keep going up, because you had the Fed pumping a lot of money into the markets, and you had very low interest rates. So now you actually have increasing inflation and decreasing real GDP growth over here, which is a really bad combination. Because now the Fed can't cut rates. If we look at these candles are the 2-year yield, and this blue line is the Fed funds rate, which is the interest rate the Fed set. As you can see in 2021, the 2-year yield was going up consistently above the Fed funds rate because they were anticipating increased interest rates. As you had very high inflation, the markets knew that, okay, the Fed is going to hike rates to control this inflation. And then as the interest rate topped out, and we had this bull market from late 2023 to recently, you can see the Fed funds rate or the 2-year yield consistently below the Fed funds rate as the market expects interest rate cuts. That's what's been fueling this bull market. But you just haven't had the interest rate cuts. We had expectations of 4 cuts in 2025, we only got 2. We have expectations of 2 cuts this year, and we've had none so far. So now you've had this big change of character where now the 2-year yield is consistently above the Fed funds rate. So we may even get rate hikes this year, which is going to be devastating for the stock market. But the market just hasn't realized that yet. And I'll show you how these things can take a while to play out. If we look at the 2008 financial crisis, the 2-year yield dipped below the Fed's fund rate as far back as 2006 is where the warning signs were cropping up. Because the market saw this situation isn't sustainable. Eventually, the Fed is going to have to cut rates to bail out the economy. And then in 2007, the Fed fund rate really dropped as you had the financial crisis. So you can see how those who were patient and saw the signal waited and were rewarded for it. So a similar thing is happening here. And assuming that the oil price is going to stay elevated, which it definitely will, and it will probably increase if this Iran war keeps going, then we're just going to see inflation keep going up. And we're going to see real GDP growth starting to go down as corporate profits go down because of this oil price increase. Their cost side is going up. And you're seeing unemployment tick up, which is going to have second and third hand effects for the economy as people lose their income, they spend less, corporate profits go down. And the probability of an Iran peace deal is just going down by the day. So it's safe to assume that this war is going to continue. You can see the probability here was 80% of a peace deal by June. And now it's just steadily gone down to 34%. And as this approaches zero, the market's going to realize that we're approaching a very bad situation here. So yes, the market seems irrational now, but it's because these things can take time to play out. So I'm just telling you, be patient, stagflation is coming. And I want to make this video now while the stock market is at all-time highs. Because it's easy to predict and to say, oh, we're in a bad situation when the market's dipping, but not when it's ripping to new all-time highs. But usually, as the trend ends, it ends explosively before shit hits the fan. So, yeah, stagflation is coming, guys. Be ready for the second wave of inflation.